Hi, I'm Dr. J. You're going to be hearing from Mr. Top Step in a second. Mr. Top Step is called Top Step because the very top ring of that pit, that's where the biggest traders stand. You want to know what they're doing, you got to watch Mr. Top Step.
From the floor of the CME Group, this is Danny Riley from the S&P 500. I hate to repeat myself, but this is the way it's been going, and we're going to do it again. We're still into the roll, we're still into the D's expiration, and most traders are not concentrating on trading outrights. They're looking at the spreads, and they're looking forward to the option expiration on Friday. As far as the rest of the things that we're seeing here, we've got about 40,000 options traded in the 10-year notes, and we've got about 320,000 traded in the Eurodollar options. One of the things that we really have been concentrating on is crude oil. Crude oil has got down below $70, down to like the low 69 level, and we really thought as the market had sold off over the last couple of weeks that the $69, $70 level would be an area that it would hold. Apparently that's working out pretty well today. The crude oil's back up around 72, 72 and a half. As far as the euro currencies, it's up a little bit. It's got the stocks a little bit here, but again, we're really just into the rollover, and there's really not a lot of volume after you subtract out the spreads. I'm going to let Jason Carter jump on right now, and he's going to get into a little bit of explain a couple other things that he's looking at. Thank you.
Hey, good morning. This is Jason Carter from the floor of the CME Group. Just to follow up on kind of what some of the stuff that Danny was saying today, there are a couple things that we were looking at other than the equity markets. And you know, this morning in the euro, we saw a nice bounce. There was rumors this morning that I haven't confirmed yet, but that Russia was a big buyer of the euro this morning, about 150 million in the cash. The other thing is that Citi was citing that they were recommending to customers to be covering their short euro positions against the dollar, and then you also have Goldman putting out a buy recommendation on that. Euro this morning is up about 40, holding on against the dollar. The other catalyst I think that's affecting this today, with the dollar being a little lower, is the crude. For the second week in a row, we've had a much bigger number in stock drops in the crude stocks. Today they were expecting, I think, 1.7 million barrels, ended up being down 3.7 million barrels. You know, looking at this technically, I mean, you'll notice that the crude traded almost exactly to the 200-day moving average, which is right at 70 bucks, and that was kind of the level that we were looking, what Danny was saying, where we would get some sort of a bounce. You know, looking at a fib retracement of this last move down here, we'd expect crude probably to correct up to about the $74.5 to $75 level. Another thing here, I think that, you know, with looking at the crude, another way to be short these commodities, especially these ones that are overvalued, cotton, sugar, is look at some of these cheaper plays on the put side. I know in the sugar you can be looking out to May, about 120 days left till expiration. Look at like the 19, 20, 18 puts, just outrights. I mean, you can put them on from anywhere from $300 to $500. Great way to be short commodities going into the beginning of the year. Take care, and stay tuned for more updates from the floor of the CME.
Yeah. Last thing that we're going to add is Floor the movie is going to be premiering in Chicago on January 15th of next year. It's a great look at some of the largest traders from the CME and what's happened to them since electronic trading came in. The way we see it, there's been a big turnover of traders down here, and the traders that are on the floor now are not the same type of traders that they were back in the day when open outcry was predominant. Right now, a lot of these traders that are in the pit in the S&P, over in the bonds over here, they're hybrid traders. They're trading electronically against the open outcry market, and they're making money, and that's all we've got to say for this week.